Hi, this is Lara at Elliott Wave Gold with your daily analysis for gold done after, at the end of the New York day for Wednesday 28th. I think it's about just almost midnight New York time on Wednesday the 28th. I'm changing my wave count today for gold. Over the last few days I've been spending some time trying to see if we can have a completed 5-wave impulse from this high to this low that meets all Elliott wave rules and most guidelines, and finally I've been able to see it. We may have 1, 2, an extended third wave, 4 and a fifth wave. The second and fourth waves show nice alternation. The second is relatively deep, it's a single zigzag. The fourth is relatively shallow, it's a triple zigzag. We still have a truncated fifth here and here. That's the same for both wave counts. No matter how I see this downwards movement, I still haven't been able to avoid that problem, but the subdivisions do fit. Here it's the fifth wave of the third wave which is the strongest, which does fit for that tendency for commodities to have strong momentum and volume in fifth waves. But within the fifth wave still, it's the third wave which is the strongest. There are some pretty decent Fibonacci ratios in this downwards movement. I won't go over those in the video, it would just be too long. They are all detailed in my text article, which is on the website. So it's possible to see a completed 5-wave impulse here, which means it may be possible that cycle wave 4 is over. I'll have a look at the monthly chart and give you an update of the bigger picture at the end of the week, and I'll have a look at other possibilities. It's still possible cycle wave 4 may not be over, but either way we'd be expecting upwards movement for several months yet, whether it's over here or it's unfolding as a double or a flat or some other kind of combination. So it's possible to see a zigzag structure completed down here, and the biggest reason why I've been looking for this wave count to see if it's possible is this big clear channel breach. This channel I've drawn around primary wave C as a best fit, and I've played with several different ways to draw it, and this looks right. I've drawn it from this low to this low here and placed a parallel copy up on these highs here. This channel also provided resistance here and a bit of support here, and now it's really clearly breached. My previous wave count was seeing this as a fourth wave at intermediate degree with a final fifth wave down to end just a bit below this point. I don't think that's going to happen now because this doesn't look like the fourth wave. It's hugely out of proportion to the second. Yesterday's wave count's now starting to look too strange. The short to medium term outlook's pretty much the same. We still got to see more upwards movement. This structure is incomplete, and it still is labelled at the hourly chart level in exactly the same way as yesterday. We still have an extending third wave which is incomplete. So within this new upwards trend, if this is the start of cycle wave 5, it should last 1 to several years and is likely to take price to new all-time highs. Doesn't have to, it could be truncated, but that's got a low probability. So we have a high probability of new all-time highs. Within this third wave, probably at minor degree, within minute wave 3, no second wave correction may move beyond the start of the first wave below 1315.92. When minute wave 3 is over, we'll move the invalidation point up to the end of minute wave 1, and when minor wave 3 is over, we can move the invalidation point over to the end of minor wave 1. This wave count would be confirmed at primary degree with movement above 1672.77. At that stage, what was yesterday's wave count is now the alternate, and that would be invalidated. At 1544, minor wave 3 would reach 1.618, the length of minor wave 1. Let's have a look at the hourly chart with the end of minuet wave 1 within minute wave 3, this high up here is this point up here. So this is within a third wave at minute degree, and this hourly chart's the same as yesterday. Here we have the end of a first wave within the third wave extension, a relatively shallow zigzag for a second wave. Minuet wave 3 now is over for sure, and it has no Fibonacci ratio to minuet wave 1. So when the fifth wave finally arrives, I'll be calculating this target again at a second wave degree, at minuet wave degree, so it may change. At this stage I expect we have an incomplete fourth wave correction for minuet wave 4. We should see alternation in depth and or structure between minuet wave 2 and minuet wave 4. Minuet wave 2 was a relatively shallow, less than 50% zigzag correction with a time-consuming, complicated B wave within it. This fourth wave may continue further. It's pretty much probably not over. It looks like it needs to continue further to be in proportion to the second wave. It may continue further as a sharper zigzag. It may take longer, it may be a flat, it could also be a double or a combination. At this stage, just halfway through it probably, we can't tell for sure what structure it's going to take. There are 13 possible corrective structures which may unfold here. All I can say at this stage for this fourth wave correction is it's probably not over. We're probably going to see at least another session of choppy, overlapping sideways and slightly trending lower movement. If it ends about the 0.382 Fibonacci ratio at 1403 or just below, then it would be ending pretty close to the fourth, well within the price range of the fourth wave of one lesser degree. So for that reason, I favour about the 0.382 Fibonacci ratio for this correction. It could also move lower, and if it ended about the 0.618 Fibonacci ratio, it would be showing alternation in depth with the shallow minuet wave 2. At 1401, the C wave here would reach equality in length with the A wave, and this fourth wave would be just below the 0.382 Fibonacci ratio, and it would be within the fourth wave of one lesser degree price territory, so that's my target for it to end. When it's over, we should see more upwards movement for a fifth wave, and at 1431, minute wave 3 in its entirety would reach 1.618, the length of minute wave 1. For the next day or so, this fourth wave correction may not move into first wave price territory. Movement below 1384.60 would invalidate this wave count. This was yesterday's main wave count at the daily chart level. This upwards movement, if this is the fourth wave correction counterpart to the second wave, it's starting to look really out of proportion. It looks strange. So for that reason, I would only seriously consider this wave count again now if the first main wave count is invalidated with movement below 1315.92 in the first instance. This alternate would only technically be invalid if intermediate wave 4 moved into intermediate wave 1 price territory with movement above 1672.77. At that stage, we can have much more confidence in the main wave count now. So I've changed the wave count because upwards movement for the last several days is starting to not look like that fourth wave correction. That's out of proportion. This looks like the start of a new upwards trend. So I'm not now expecting that final one push down. I expect we're in a new upwards trend, maybe to last 1 or several years. That's all for me today with your gold analysis, and I hope that everybody had a fabulous day.